Hello and welcome to your Daily 5 for the 10th of February. My name is Julius de Kempenaer and I'm presenting to you from Amsterdam in the Netherlands, and I am your host for today's show. I'm a senior analyst here at StockCharts.com and the creator of relative rotation graphs. No surprise that they are the weapon of choice when I present your Daily 5. You can find my contributions in the RRG blog on the site, as well as on StockCharts Television, where I host Sector Spotlight every Tuesday from 10:30 to 11 a.m. Eastern. When you follow Sector Spotlight, you may have noticed that at the moment I am pretty cautious with regard to the market as a whole. I think we're at levels that are probably characterized as elevated risk. So when we do some stock picking, I think it's important to also make notice and note that be aware of things that might not be going so well and find some stocks that are worth looking at, maybe from the downside, from short side, or just see them as stocks with elevated risks. Now, if we start with the sector RRG, that's the main view. Then what I want to look at are sectors that are moving in opposite directions when I'm looking for long positions and when I'm looking for short positions. Now, when I'm looking for long positions, then financials is one of the sectors that has my interest because it's moving into the leading quadrant, has just moved in there and set a strong RRG heading. When I start looking for sectors that are moving in an opposite direction, you rapidly arrive at technology and consumer discretionary. Now, because technology is just a very popular sector, a lot of people look at it, I decided to stick with technology for this version of your Daily 5. Now, if we stick with technology and we move to the groups that make up the technology sector, then we can go over to the chart on the right, and that's where we see the individual groups that make up the technology sector. If we go over these, then there are a few groups that have noteworthy rotations, especially from a negative point of view, because the tail for XLK is moving to the lower left-hand side, which is negative. So we're going to look at sectors that are moving even weaker versus XLK. So this is XLK versus SPY, and these are the groups versus XLK. Now, the ones that I think need attention from a negative point of view, be very careful with, is electrical equipment. So where is that? Here is electrical equipment. It's on the left-hand side, rotating around that, ready to roll over again. The other one is software. If you look at software, that's the one here. It's already inside the lagging quadrant. It's picking up a little bit of momentum, but not too much. Also an important sector inside technology, but one to reckon with, to be careful with, because it is underperforming the sector, XLK. And then the other one is renewable energy. That's a sector that is in a strong relative downtrend versus the technology sector. That's a sector that's better be avoided. And then the one that we really are interested in is semiconductors. If you look at semiconductors, look at that tail coming out of the leading quadrant, moving into weakening, and now rapidly heading towards the lagging quadrant. If I go over all the individual stocks inside the technology sector, and particularly the semiconductors, then there are two stocks that have my attention as potentially dangerous or even more dangerous. And these are NXP Semiconductor, and Texas Instruments. And you can see the rotations here right on this chart. If we look at the individual charts for those stocks, then you can see Texas Instruments here completing that big top formation, moving lower, completing this toppy formation, and very likely heading even lower than it already is. There's some support at that 170 level. Relative strength is already on the in a downtrend and likely moving further down. The other one is NXP Semiconductors. That's the tail that rolled over inside improving and then moved back into lagging, and we know that that is bad. If you look at the chart for NXP, then you can see that it completed a small double top here, rested on 180, that's an important support level. If we break that lower, then I think we can go much, much lower, probably to the old highs here at the start of 2020, which is around 130, 130, 140. The relative strength is clearly in a downtrend. Now, if we move to the financial sector, that's the tail that went up, and we move to the individual groups that make up the financial sector, then there are a few groups that have my attention. And the first one is life insurance. If you look at life insurance, that is moving straight into the leading quadrant. That's a strong tail. There is consumer finance, which is inside improving at moving at a strong tail. And there is full line insurance, which is rotating back up into the leading quadrant. So these groups I focus on to find some interesting stocks to trade from the long side. And the ones that I found are on this RRG. And you can see there's 4. I should only have 3. However, Met is a life insurance company right here. I dealt with that in my previous contribution in your Daily 5. It was already a strong stock then, and it still is, and it's continuing its route. From this life insurance group, I'm not going to talk about Prudential. That is a very nice tail following Met, much alike, powering into the leading quadrant. The other one is AIG. It's rotating back into the leading quadrant from weakening, and we know that these are usually strong moves. And then the third one is AXP, American Express, consumer finance, really nicely picking up a lot of relative momentum. You see the segments growing here on that tail, which indicates strength. Now, if we look at those individual charts, then we start with Prudential. That's Pru here. And you can see that it wasn't a nice uptrend. It slowed down a little bit. And now it's breaking out of this already rising move. And that's usually a pretty strong sign with a lot of follow through. We can see that a couple of weeks ago already relative strength broke out, and you can see the RRG lines moving higher in the same direction, and that's causing Pru to move in that nice almost straight line further into the leading quadrant. So Prudential, definitely a stock worth watching inside the financial sector. Now, the second one is American Express, AXP. Consumer Finance Group, as we saw, that was strong, and you can see the tail here moving, and you can see how nicely American Express is breaking out of that broad range that we've been in pretty much for the better part of the year after April. And you can see that relative strength is also pushing higher and supporting a further rise of the stock American Express. And the last one that I want to deal with is AIG. Obviously a notable stock, big down move during the crash in 2009, and I had to go to some monthly charts to see what happened. And this is actually a break to new highs, to the highest level since 2009. I think that's a very important break in terms of price, but also in terms of relative strength. So inside the financial sector, inside the full line insurance group, I think AIG is definitely worth an additional look for potential long positions, even despite the risk that I see for the general market. And that concludes your Daily 5 for today. Thank you for watching, and I hope to see you again at a future episode of your Daily 5 very, very soon.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.